Imagine you have spent years building your emergency fund, investing regularly via SIPs, and saving money for your future goals. Everything seems to be on track. Then suddenly, a medical emergency strikes. And within a matter of days, you end up losing a large part of your savings. Friends, the reality is that healthcare costs in India have been rising rapidly. A few days of hospitalization can easily cost you a few lakhs. Today, everyone is focusing on wealth creation. But what about protecting the wealth that you have already created? Also, today many people have corporate health insurance. While employer-provided insurance is certainly helpful, relying entirely on it can be risky. The most common issue with corporate health plan is insufficient coverage. Also, if you change jobs, lose your job, take a career break, start a business, or retire, that corporate health protection may no longer be available. So in this video, let's discuss how much health insurance a family should have and how to choose the right health policy. In this video, I would share a very important strategy to get a very high health coverage without paying a high premium. And towards the end, I would share a complete framework on how I would buy health insurance for my family. So watch this video till the end. One of the most common questions people ask is, how much health insurance should I buy? Unfortunately, there's no one-size-fits-all answer. The right coverage depends on factors like your city, family size, age, lifestyle, and existing health condition. However, here is what you must keep in mind. 10 years ago, even a 5 lakh health insurance policy was sufficient. Today, 5 lakh may not be enough. So before buying health insurance, think beyond today's healthcare cost. Will that cover be enough 10 years down the line? So for a young family consisting of husband, wife and a child, a 10 lakh base health insurance policy along with a good super top-up cover can be a reasonable cover. Now what is base health insurance and super top-up plan? So this is a great strategy to have a good health cover at the same time keeping your annual premium under control. Let's discuss it. Now we come to one of the most important concepts in health insurance, and surprisingly many people are still not aware of it. So considering inflation, let's say you decide that your family needs health insurance coverage of 50 lakh rupee. So the first option is to buy a 50 lakh health insurance policy. Now you can always do that, but in this case, the premium will be quite expensive. So instead of buying a 50 lakh health plan, you can buy a smaller base health plan, say 10 lakh, and then add a super top-up policy of 40-50 lakh on top of it. Think of this base policy as the first layer of protection. If a hospitalization results in a bill of let's say 6 lakh and you have a 10 lakh base policy, the base policy handles the claim. Now suppose a major medical event results in a bill of 25 lakh. In such case, the first 10 lakh can be covered by base policy while remaining amount can be covered through the super top-up policy. However, please keep in mind that super top-up plans have deductibles. So have a solid base policy first. What it means is, if your base policy is only 3 lakh and you opted for a super top-up plan of another 15 lakh with a deductible of 10 lakh, then super top-up will only start after 10 lakh. So if your expense is let's say 15 lakh, there's a gap of 7 lakh that you have to pay. However, in this case, if you have a base plan of 10 lakh, then super top-up will take care of remaining 5 lakh and you won't have to pay anything out of pocket. The reason this structure has become popular is because it allows you to offer a very large health cover at a relatively affordable cost. Of course, there's no fixed rule on the right combination of base cover plus super top-up plan. It would vary from family to family. By the way, while researching for this video, I actually spent some time with Ditto Insurance team going through a few of these scenarios. And honestly, it was pretty eye-opening. If you don't know them, they are Zerodha backed, and what I genuinely like about them is that they are not trying to sell you something. No spam, no pushy follow-up calls, just straightforward spam-free advice. Their website has some really useful stuff. Plan reviews written in layman language, a health insurance checklist, and a comparison tool where you can actually see what is good and what is not across different policies. It's the kind of resource I wish I had when I was figuring this out. But what I would actually recommend is booking a free 30-minute call with one of their IRDAI certified advisor. You can just talk through your situation, ask questions, and they will help you figure out what makes sense for you. To explore further, link I provided in the description and pinned comment. Now next question is, should you buy an individual health plan for family members or opt for a single health plan for the entire family? Let's discuss it. Once you have decided how much coverage you need and understand the role of a super top-up, the next important discussion is choosing the structure of the policy itself. Should you buy a family floater policy, or should each family member have a separate individual policy? So if a family of 3 has 10 lakh family floater policy, each member can use this cover subject to overall limit of 10 lakh. On the other hand, in an individual health insurance policy, each person gets a separate sum insured. For most young families, a family floater policy is usually the preferred option. However, there are situations where individual policies may make more sense. One common example is if senior citizen parents are included in a family floater plan with younger family member, then premiums can increase significantly because your policy is effectively priced based on the highest risk member. In that case, it's better to keep parents on separate health insurance policies and have a separate family floater policy for yourself, your wife and kids. Then another situation where individual policy can be useful is when one family member has a significant medical history or pre-existing condition that may increase the probability of future claim. So the best approach is a family floater policy for husband, wife and children, separate policy for parents, a super top-up cover to increase overall protection. Now, even after choosing the right coverage amount and policy structure, there is another challenge. Health insurance brochures are filled with dozens of features, benefits, and technical terms. So let's simplify things and focus on the few features that can genuinely make a difference when you actually need to make a claim. Let's discuss 3 features that I personally consider extremely important. First is no room rent restriction. Some policies restrict you to a specific room category or cap the room rent as a percentage of sum insured. For example, let's say your room rent limit is 5,000 rupees a day, but let's say you opted for a room costing 10,000 rupees a day. Now let's say the total bill for 3 days of hospitalization is 4 lakh. Now you may think that since you opted for an additional 5,000 rupee room per day, for 3 days you have to pay 15,000 rupees extra out of pocket and remaining 3.85 lakh would get disbursed. However, the catch is, since you have chosen a room that is 2 times your eligible limit, insurer may apply a 50% proportionate deduction on your expense. In simple word, out of 4 lakh of medical expense, the insurer may settle only around 2 to 2.5 lakh and you may have to pay the remaining amount yourself. So ensure that your health plan does not have room rent restriction. Then second is no co-payment requirement. A co-payment means you also bear a certain percentage of the bill yourself. For example, if your policy has 20% co-pay and the hospital bill is 5 lakh rupee, you may need to pay 1 lakh from your own pocket. So avoid co-payment clause. Then third is no disease-wise sublimits. Some policies advertise large coverage amount but quietly impose limit on specific treatment. For example, a policy may offer 10 lakh coverage but limit cataract treatment or joint replacement claim to a much smaller amount. So always check whether disease-wise specific sublimit exists or not. Another valuable feature is no claim bonus and restoration benefit. A good policy should reward claim-free years by increasing your available cover. Similarly, restoration benefit can automatically replenish your sum insured if it gets exhausted during the policy year. These features can substantially improve your overall protection. Next, check the insurer's cashless hospital network. Ideally, the health plan should cover top hospitals in your city along with all major metro cities. And there should be a cashless option where you don't have to make any upfront payment. I've seen incidences where people had health plans but still had to pay the hospital fee upfront. And then later, they had to struggle to get their claim reimbursed with the health insurer. In fact, one thing I particularly like about Ditto is that their support does not end after policy purchase. If you are facing issue during a claim, the team would assist with paperwork and would guide customers through the process as well. And during medical emergency, having that extra support can be extremely valuable. Apart from this, there are some small but important features you should consider. First thing I would check is pre and post hospitalization coverage. Your hospital expenses start before admission and continue after discharge. There could be doctor consultation, diagnostic test, medicines, scans, follow-up visit and so on. Ideally, look for policies that provide at least 60 to 90 days of pre and 180 days of post-hospitalization coverage. Next, check daycare treatment. So traditional health policies were designed around the idea that hospitalization meant at least 24-hour stay. So they won't provide health cover for daycare treatment. But today many procedures don't require 24-hour hospital stay. Hence, your policy should cover these treatments without any limit. Another feature worth checking is Ayush coverage. Many families today use alternative systems such as Ayurveda, Yoga, Unani, Siddha or homeopathy alongside modern medicine. Most modern health insurance plans provide Ayush coverage at recognized institutions, but it is worth confirming the detail before buying. Another often overlooked area is consumables and modern treatment. During hospitalization, expenses like your gloves, PPE kits, syringe and other consumables can add up. Some policies cover these costs while others may not. Similarly, modern treatment like robotic surgery and advanced procedures should ideally be covered without restrictive limit. Then many insurers also provide preventive health checkups. While this should not be the primary reason for selecting a policy, it can be a useful benefit. Some plans offer annual or periodic health checkups even if no claim has been made during the policy year. Now the final question is, if I were to buy health insurance for my family today, what is the practical framework that I would follow? Let's discuss it. Okay, before I discuss my framework to buy a health plan, please remember that this is not a one-size-fits-all recommendation. Every family situation is different. The objective to provide a framework is to help you think through the decision logically. The first thing I would do is ensure that I have a personal health insurance policy, even if I already have health insurance through my employer. Employer-provided insurance is a useful benefit, but I would never want my family's healthcare protection to depend entirely on my job. Second, I would focus on building adequate overall coverage, not just a large base policy. For many families, a combination of reasonable base policy and a large super top-up can provide substantial protection at a relatively affordable cost. Third, I would prioritize policy quality over the lowest premium. A slightly cheaper policy may look attractive today, but if it comes with room rent restriction, co-payments, disease-wise sublimit, or weak coverage feature, the savings may not be worth it when an actual claim occurs. Fourth, I would choose a policy from an insurer with a strong cashless hospital network and a reputation for smooth claim settlement. During a medical emergency, the quality of claim support can matter as much as the policy feature themselves. Fifth, I would buy health insurance as early as possible rather than waiting for health issues to develop. Buying early generally means lower premium, smoother underwriting, and more importantly, waiting periods start getting completed while you are still healthy. Sixth, I would make sure that all medical information is disclosed honestly at the time of purchase. A health insurance policy is a long-term contract, and transparency at the beginning can prevent claim-related complications later. Seventh, I would review my coverage every few years. Healthcare costs continue to rise, income change, and family responsibilities evolve. The amount of coverage that feels adequate today may not be sufficient a decade from now. And finally, remember, health insurance is just one part of your financial safety net. Alongside it, make sure that you have an emergency fund and adequate life insurance if people depend on your income. If you're still confused about picking the right plan, honestly, please book a 30-minute free call with Ditto team. Link I provided in the description. So that's it from my side. Take your time with this decision. The right plan today make a huge difference when it matters the most. Thank you for watching this video. I'll see you next video. Till then, take care.